Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight it was a somewhat volatile session with the Australian dollar at one point jumping from 60.5 to a high of 61.85 in minutes. As you can see here, very erratic move. I can't find any reason behind it, but the market was only there briefly and dropped back instantly to the bottom side around 60.75, which is where the confirmation to the bearish outside range day. And now asks the question whether we have confirmation due to the New York close was under that level of 60.65. I would like a little bit more evidence coming from the technical implications to support my call, that is, from the bearish outside range day, looking down towards a region of 58 cents as an objective. And therefore, let's see if the market can continue on with the immediate target seen at 60 cents. Any advances should struggle towards 61.25 to 61.65. Well, as the US dollar for the fourth consecutive day now rises, is that the euro has come back under pressure, and you can see now is getting closer to the level of 108.60-65. Later today, all eyes turn to the US employment claims, and therefore wonders whether we will see another greater number. That is, the previous number came out was at 3.2 million job claims, and the forecast is around 3.5 million. And then tomorrow we have the main event, which is when the US Labor Department releases its monthly US jobs report, and it's likely to show a sharp drop in payrolls. Previous month was around 273,000, with a forecast a negative 100,000 jobs lost. So let's see if the market plays to those numbers, with the unemployment also rising from 3.5, a 50-year low, to a 3.8 expected forecast. A break of 108.60 on the euro would give a significant move down to the level of 106.60.80 and confirm the bearish case, and with the MACD, along with that with the RSI marrying up to this, would strengthen the view to the bearish case. The dollar yen a little bit mixed after the last 4 trading days. One stab above the level of 108 still holds its course, with the MACD remaining negative along with the RSI. I do anticipate the bears will continue to pressure the downside due to the fact is that the US dollar will maintain uncertainty along with the safe haven demand, and therefore could see a further decline, with the immediate target seen around 107.15, maybe to 105.85 with the objective of 105. Any advances should lack momentum above 108. Pound has gone hardly anywhere in the last 4 or 5 trading days. I don't have a view and still remain neutral. I'm waiting for better opportunity, and therefore once we start seeing this from the MACD and the RSI can confirm to a trade. However, I would entertain the market to shorten, that is, if we see it up around 126.70 to 127.45. Dollar CAD hardly went anywhere overnight after its whipsaw price action previously rejects the level of 143, and then previously before that reject the level of 139. From a technical point, it is trying to recover, but it all depends on what oil does. And oil is clearly, from my perspective, bullish. Once we get there, I'll explain a little bit more. But for now, I expect to see them further tests to the walls downside, with the target seen around 139. Gold attempted to recover overnight, but still, from a technical point, is a little bit somewhat negative due to the fact that the RSI is remaining under the midway point along with the MACD. I'm not bearish, I'm just pointing out the fact is that since the heavy sell-off above the 1,600 level after rejecting the level around 1,648, we're still vulnerable to the downside, which is seeing the bullish foundations around 1,550. We may get towards that level, and as you can see, it is quite a drop. It's around $34, and if so, we may see that move and then see a rebound from there and back up towards the top side of the range around 1,650. Well, I'm wondering why the bulls haven't come, considering the fact is that the MACD is married up to the RSI near enough, and they're both coming through quite strong in terms of technically a bull rally. I do anticipate that the longer we remain down here, the more risk of a bull run, and therefore The base really holds, from what I can see, around $20 a barrel, and the mid target at this stage is around $28 with immediate of $23.5, $24.5 to $26 to $27 a barrel. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. Hope you enjoy the rest of the day.